Welcome to today's presentation, where we have the pleasure to present Össur. To help us through today's presentation, we are joined by CEO Svein Silversen. Today's event is a broad introduction to your company, trying to go into the helicopter and look down at what is driving it, what are your growth drivers, what are your financial, what to expect as an investor. And I think that's what you hopefully future investors or current investors can come from it, what to look out for and how to better understand that company. So not so much about the current situation. As always, you're very encouraged to ask questions down in the box down below during the presentation. I will see if it fits in, or else we will take everything in the end, so no worry. But for now, I think I will hand the call over to you, Svein.
Thank you very much, Michael, and thanks for having me here today, and thanks to all of you who have called in. It's a pleasure to have the opportunity to present to you Össur, and what I'll do over the next 15-20 minutes is just to give the big picture, and then we can dive into name. So Össur is a mid-sized global medical device company. We operate in up 40 countries globally, about 4,000 employees, and have been a listed company since 1999 and listed on the stock exchange in Copenhagen since 2009. We are an innovation-driven business. We invest about roughly $30 million in R&D. We have about 2,000 patents with regards to how devices are fitted to the external body. I'll get back to that a little later in terms of what type of product and solution focus we have. The company has always grown, and since we were listed in 1999, our growth has been on average over this period around 17%, and throughout this period the company has also been profitable and now over the last couple of years we've also started to return capital to our shareholders, most in the form of share buybacks. Sustainability is for our business as well as every other all companies these days, and I will touch on that also later during the call. If we look at what product segments we operate in, first and foremost, prosthetics. This is our legacy business. This is where the company started, and today we manufacture solutions, everything that is basically needed to build a prosthetic leg or a prosthetic arm, and we have the whole product portfolio, both the more basic mechanical products and the more advanced solutions, which we refer to as bionics. Bionics are components that have some sort of sensor technology that help the user move more freely and more naturally. And this is also a key theme that I'll get back to a little later. Bracing and support is the other product segment, where we have mostly products for let's say for individuals that have had an injury of some sort and are recovering from that. So these are typically products that are used for one time or over that rehabilitation period, while part of our bracing business are osteoarthritis solutions, or in Danish slidgigt, where bracing is used as an alternative for knee replacement surgeries for people who have osteoarthritis in the knee. This is 19% of our business, prosthetics 45%, and then patient care, with the front end of the value chain, where we also are active in operating service entities that basically serve the people that need our products. And this is now 36% of our business. It's important to note that both the prosthetics business and the patient care business, this is more, you could say, a maintenance service business in some shape or form. Most of what we do in this part of the business is servicing an existing population that has a chronic mobility challenge and needs to come back every year for an upgrade, maintenance, or renewal of their prosthetic, mainly prosthetic device. And it's also important to note that 90% of our business today is in reimbursed markets, where the end payer for the solution, and that goes for everything we do, also the bracing and support side, is a government or private insurance scheme of some sort. We are a global business, although our presence our main presence is in mature healthcare systems. And we have a presence in all countries, you could say, that have a reasonably mature healthcare systems that has an established process for supporting individuals who have a need for a prosthetic solutions or a chronic mobility solution. However, most of again, if we zoom in on the prosthetic side, most of the individuals that need a prosthetic solutions are typically situated in private pay or emerging markets, and this is where we are investing quite heavily and have had to make some adjustments to our business model to be able to address the private pay demand. Just a little bit more about the different markets we play in, starting with prosthetics. It is a $1.5 billion market growing 4 to 5%. We have a 23 to 24% share and are the second biggest player in this industry. There is a German company called Otto Bock, which has the largest market share, and then the remaining part of the market is rather fragmented. We're also a top player in the bigger bracing and support market, and in the patient care market, which remains very fragmented. We have a 2 to 3% market share, but it's important to note that our relative market shares in the countries where we are in patient care is higher. Again, referring back to the growth story, since the company was listed in 1999, in the first phase of this development, it was a lot about consolidation in prosthetics, building a global prosthetics business. Then we entered bracing and support in 2005 and 2006, and the main theme around acquisitions over the last 10 years has been to build a platform in patient care. But over this whole period, it's been a very stable organic growth combined with M&A-driven growth. And we still see opportunities for further consolidation in our market, both on our product segments and also in the patient care side of the business. But this is also a good slide to sort of refer back to the different maturity stages that the company has gone through. Up to 1999, it was basically a small startup company with one product. Then the next 15 years was all about building a global product company. And then now we are in the third sort of maturity phase, where we are now operating in the whole value chain. And this is a picture that we have used to sort of explain the transition we are in as a company from being, let's say, a niche product business to being a business that is now operating in the whole value chain, that is principally focused on individuals that have a chronic mobility challenge and are served in the orthopedic and prosthetic channel, which is our stronghold, if you will, where we both operate our own clinics and have very strong relationships with all clinical providers globally. And our playing field and our focus is, again, both, let's say, the amputee population, obviously, but also other population groups that have a chronic mobility challenge, maybe as a result of stroke or as a result of some other traumatic events that lead to the need for a mobility device in their lives.
And looking at this, and I think a little about the hearing care sector. I'm sorry I know we can't compare it, but there you also saw first the product growth, and then they also went into the whole chain, you might say, a vertical integration.
Yeah.
Is that the same thing you are seeing in your business? And is that the next leg of growth, you might say, for you? I know some by acquisitions and so on, and is it how we should look at the company of you a little bit going forward?
That's a good question, and I'm not an expert on the hearing aid side, but from what I though understand, there are definitely similarities. Now, it's sort of, if we look at the big picture and the macro trends in our industry is that digitalization, technology changes, also reimbursement, as always, wanting more, let's say, more for less, if you will. Yeah. And the concept of also healthcare consumerism to more extent. We see every year, we see individuals that need the devices that we are providing are more and more sort of coming in and having an opinion on what type of solutions that they want. This is especially in private pay markets. So that is pushing some consolidation in the overall value chain, and there's strength in being in the whole chain. And because it's important to remember that we are first and foremost in the business of servicing an existing population that has a chronic mobility challenge and will need to have a strong partner for the remainder of their life, and that is how that is the business that we are in. And
so you know, if we are looking at it, and you're saying in the future we will ask more, the undertreated people will ask more, and you can much better serve and get those people into a channel if you have the whole chain. Is
absolutely
that how
that's exactly right. That's exactly right, because the patient populations that we've decided to focus on are generally underserved, both in well-paying mature healthcare markets, and certainly also in private pay markets. Just to give you a few statistics, only half of amputees in the Western world get a prosthesis. Only a few percent get a good prosthesis. And the general, let's say, the standard of care is still a wooden leg and a crutch. So there's a lot of opportunity to, let's say, for us as a company and us as an industry to fight for better access for more amputees. And also, as we now start to look at other chronic mobility categories, again referring back to the stroke population, where as a result of stroke you will often have, or individuals will often have, chronic or neuromuscular disorders that lead to a mobility impairment of some sort. These are the patient populations that we are focusing on, and the general reality, unfortunately, is that these patient groups are vastly underserved.
And often when you have such a situation, you know, it's about your documentation, what you call the health economics. You know, it's easy to understand on some subjects where you have follow-up diseases and so on, that you can, if you can stop it here, you can. But in your field, can you also make health economics showing that, you know, if you treat patients better, you know, you avoid them falling or something like that, and such, so you can actually prove health economic wise that you are cost saving, even if you should move them up the value chain for the societies. How is it? Are you doing a lot of that in your business, or is it evolving?
No, this is you're spot on. This is the key, because it is about health economics, that because these are good prosthetic devices, it can be up to 10 times more expensive than a bad one. And the health economics are very, very solid, because individual that is using a good prosthetic device, you could say, and will be more active, much less likely to fall, because one of the biggest cost burdens for the healthcare system is when elderly amputees fall and need to be hospitalized. So it's easy to understand, but all the other healthcare costs that comes with not being mobile and being subject to falls and things like that is a huge cost burden for the system. So our approach is to convince healthcare systems, convince payers that let's say the burden of care is much lower if the system provides access to good prosthetic devices. And this is what we have to fight for in each and every market, because to some extent the complexity in our industry comes with every country having their own healthcare system and having their own decision-making protocols in terms of what is paid for and what not. So this is where we have a huge job to do as an industry and as a company to fight for more access, both in mature developed markets and in less mature private pay markets.
Perfect. Thank you.
Thank you. just a few words about what we refer to as our growth drivers. In its most simple form, it's about reaching the right patients with the right solutions and creating more value in the overall chain. And if I can explain that briefly, the traditional way of making a prosthetic leg is such that you always need to customize the hard socket that needs to be tailor-made to each and every individual, because the stump will be different in size and shape, etc. And traditionally, this is a very labor-intensive, prone to error, low-quality process in many markets, and it's a big task to do again in the industry to simplify the delivery of these mobility devices, especially in private pay markets where people often need to travel far and just want to come once for a definitive solution. So it is about these themes, and
you solve that technologically, because as
yes.
I said, and I best know the hearing industry. If you have too few people who are trained to do this, can you then make the technology make this as a part and lower the time they need to consume, and you get into that value chain by helping to lower the needs for very specialized people through 3D scanning or something like that,
yes,
and so on. Is that a part of your business and your strategy also?
That's a huge part of our approach to both, let's say, to simplify the delivery protocols. And we have somewhat unique technology in Össur in terms of how we can build legs more efficiently, and that has proven to be a good concept. For example, as we test new models in some of these rural private pay markets, where we are, for example, experimenting with just mobile clinics, where you find the patients through digital outreach, and you also figure out in some cases how to get it paid for by if people have had accidents and are eligible for insurance, that we have a way to help people acknowledge that and solve that, and then bring a solution that is attractive for in a market, and let's say a private pay rural market, and there is payment. It needs to be commercial. It's that because someone needs to be able to maintain the solution. It's you need to maintain your leg as you need to maintain your car. You need spare parts. You need maintenance, etc. So this is a very big part of our strategy. And if I can talk to some of these big picture themes, I mean, this is at the highest level, just if you could call the private pay opportunity or the emerging markets opportunity, where only 10% of our sales today come from markets where you have the vast majority of amputees. 90% of our sales come from just these established developed markets, and we see the highest relative growth rates are in these markets where we have made an investment. For example, in China, Brazil, these countries have been major growth drivers for us in the last couple of years, and we continue to invest in infrastructure to build our business in these markets. And we have a big job to do to grow our relative revenue contribution and access in these private pay markets. And just on because you asked earlier about health economics. I mean, this is what we refer to as the functional trade-up, where on the far left you have the wooden leg, which is actually the standard solution in most markets today, unfortunately. And then as you move up the curve towards the bionic solutions, and bionics are today about 25% of our sales, but it's only low single digit in terms of volume. So there's still a lot to do to move more amputees onwards to bionics in the well-paying markets, reimbursed markets, but also just to create more access in the private pay markets. Then the patient care journey. Össur is now over the last 10 years, we've built a business in also being active in servicing the people that use our products, and we have a presence in some of our biggest markets in Europe and in the US, and have have built a very strong platform where, again, it's all about servicing an existing population, and by being in the whole chain, we're better enabled to capture these trends like healthcare consumerism, and also to have a direct contact to the people that decide what is paid for and what not, and also have direct contact to the patients to be able to better influence the adoption of better prosthetics. Just a little bit about the numbers. We have grown consistently mid-single digit organically, and then there's been a further contribution from M&A, and with fairly stable operating margins. Now, the last couple of years have been obviously there was COVID, and I'll say that here now this year we are guiding for 7 to 8% organic growth, which is one of the strongest organic growth years that we have had in recent years. So the business is after COVID now back on a really good track. And let's say the growth, our growth ambitions are to grow the overall business 7 to 10% year over year, which is 5 to 7% organic growth and 2 to 3% acquired growth. This is what we have communicated as part of what we refer to as our Growth 27 strategy, our 5-year strategic plan. The business has always been quite cash generative. We don't have a lot of assets to maintain as such. Our main assets are our people, our relationships, and most of the operating profit has historically converted to cash. We want to maintain a net debt to EBITDA sort of somewhere between 2 and 3, and will then return cash to our shareholders in the absence of M&A that we believe to be accretive for our overall performance. Now, finally, as a last slide, I always need to mention our sustainability commitment. Obviously, our biggest impact when it comes to sustainability is that we contribute to the overall health of the population by making or helping more people to become mobile. But we have also committed to the science-based targets and have some, we believe, a very ambitious program to make sure that we contribute as much as we can in this regard. So, Michael, this is
perfect.
22 minutes.
Let's take some questions and get us a little bit around. Just 2 seconds. There's a question here. Are you less or more cyclical than other companies in the medtech industry? How should we look at your company? Everybody's worried about the growth. How is that affecting you? Have you seen something in the past there?
Yeah, the simple answer there is that when times are good in the overall economy, that will not have as much of an impact on us. When times are bad, that will also not have as much of an impact on us, because we are in the business of supporting individuals that have a chronic mobility challenge, and it's mainly government systems that pay for it. So the demand is stable and the payment is stable. So all else equal, the business is quite recession resilient. But also when times are really good in the economy, that would not necessarily have a positive impact either on the business. So that's said as well.
So I remember I also covered a company in the past that made the steel you put in the body, and so they were impacted by the activity. You have more sporting injuries, you have more workload incidents. But you are more in the chronic space than this. Is that understandable? So that
is right. That is right. I mean, most of let's say the bracing business, which is 20% of our business, that is somewhat activity driven. So as people and that is actually what is driving demand for that those types of solutions, is that is also that the population is generally getting older and more active and wanting to stay more active longer, and that is the most powerful volume growth driver for the bracing business. For the prosthetics business, it is it is very stable because
it's stable, and you penetrating and getting patients in that is undertreated. Is that
yes,
how we should
that
see
is the name of the game, yeah, in the chronic space, absolutely.
Then there's a question: what do you see as a main threat to your growth ambitions? If you should mention one or two threats.
I mean, I always sort of I have to refer back to reimbursement. I mean, if there is some sort of major change in reimbursement in some of our major markets, that will short term have an impact on growth. But it's also important to remember that the demand is not going to go anywhere. The demand is there. The demand is stable. And also, to be fair, we haven't seen over the last decades any major change in reimbursement. It's been the other way around. We see more and more countries adopting payment for higher, let's say, or better mobility devices. So on average, the structural growth drivers are fairly solid and fairly stable. Again, referring back to the underutilization of good mobility devices within the patient populations that we have decided to focus on. So there could always be some technological breakthrough from some of our competitors. As such, I don't want to discard that, but also again, that is not necessarily something that we have seen disrupt the industry in a major way historically. So I would say the structural growth drivers are pretty favorable and are pretty stable.
Perfect. Then there's a question: what are your biggest competitor, and which company, if you should choose some, are you most comparable to in the medtech space? It's a little bit to place you in a framework. And are there any of your biggest competitors? Are they in the stock market, or is it primarily private companies that?
Yes, unfortunately, there is no listed company in our space. I'll refer back to Otto Bock, which is a private German company that is our main competitor, if you will, in a global context. And then there is a long list of smaller businesses that are smaller in terms of geographic scope and product approach to the market. So unfortunately, I can't point towards any listed peer.
No. Perfect. Then there's a question: how is the ownership structure? The largest shareholder, I think there was a notification of you getting a large shareholder in November. So a little bit about the ownership structure. We know as Danish people that I think Demand Foundation has a big ownership in you. So a little bit about your ownership structure.
Yes, the Demand Foundation has been invested in Össur for 19 years. They took the first major investment in 2004. And Nils Jakobsen has been on the board pretty much ever since, and has been chairman for the most of that period as well. And now the Demand Foundation owns 51-ish%, and they've stated that they want to maintain a shareholding between 50 and 60%, the similar philosophy as they have in the hearing aid business. And yes, then we got to have a new big shareholder, the Interogo Group, or the IKEA family foundation, or one of those investment companies has flagged a shareholding over 10%. Then we have, I would say that the general sort of the typical healthcare investors, the typical institutional investors, plus a sizable group of individuals that are invested in the stock.
Then there's a question, looking into the next 1 or 2 years, what should investors especially keep an eye on? Is it new product launches? If you should put 1 or 2 success criteria, we can follow you and hold you accountable to that you really want to deliver the coming years besides the growth. So is there something special that we should look out for when you announce it, or something like that?
Well, I mean, there we haven't communicated specific, let's say, events that are on the horizon that will make some major impact on our overall journey. But what I will, though, point your attention to is the bionic business. That is probably where we have the biggest opportunity to get more people using better products, but also generate organic growth. And we are, our bionic portfolio is strong, and we have a strong product pipeline as well going into next year. And success around that pipeline and further developing that portfolio is an area where I would urge people to familiarize themselves with and understand that and follow the news flow around that, as this will have a big impact on our ability to drive organic growth rates towards the upper end of our target range.
So that the product setup, and is it also we should follow your development in the emerging market, penetrating
Absolutely.
that, and
Absolutely.
is that the other driver, that if you are more successful there, then you could be at the upper end? So
absolutely, I mean that it is the bionic space. It's the emerging markets execution, and also our success in terms of tying the whole value chain together. We talked a little bit about that as one of the growth drivers, how as our ability to more effectively deliver mobility solutions. And one of our major themes have been to sell, let's say, complete legs, offering our clinical customers an ability to outsource also the customized process to us, where we digitally scan a stump and we ship back a complete leg from our central fabrication. These are some of the themes that are important for our growth journey, and where we are leveraging our presence across the value chain and our relative advantage of scale in this industry to be a better partner for our independent customers.
And there, I guess, scale matters, so your M&A strategy also is important. Yes. And there's actually a question here. Many technical universities in the world have projects in your field. I guess that's where the really groundbreaking stuff happens. Is that a source of acquisitions that some small companies maybe come out of this field, or they develop something, where the signaling and so on? Yeah. Is that a source of acquisition for you?
Yes, I mean that is we have adopted a mindset of open innovation in us. We have a fairly ambitious innovation program in-house, if you will, but we also work with universities. We work with companies outside of our let's say outside of our industry to constantly stay on our toes. And we've historically also acquired technology that has been invented elsewhere. And for example, our power knee, Össur has brought the first powered prosthesis to the market, where last year was the first sort of real commercial launch of our power knee. This is a technology where part of it originates from MIT in the US. So yes, we try and work a lot with top tier universities to make sure we have access to good ideas and good people.
And I always have a question when, so I think we have done the audience now. The exoskeletons, we really have talked many years for that, as empowering people, the weaker people, getting them to stay at home, that's the whole body skeleton. And I guess you have a very big knowledge of this field, because you are making a knee move depending on the reactions. And there was a couple of years a lot of talk of this field, because they can help people work without work injuries. They can help elderly people stay in their home until much longer, and so on. So is that a field you're looking at or thinking at or applying into? Now I'm trying to look 10 years in ahead, but I think it's allowed on.
Yes, absolutely. I mean, the exoskeletals or robotic braces, if you will, is very close to us as a business. First and foremost, is our intellectual property portfolio and our built up expertise in building devices that fit to the body is one thing. The other aspect is that this is a majorly underserved patient population. Patients that have had stroke, for example, that have some sort of neuromuscular disorders and need some sort of mobility device, whether it's for only rehabilitation or to just be able to take more active part in day-to-day life. Now, the situation in and around that market today is that there is very little reimbursement or the health typically these individuals will get some rehabilitation, some physiotherapy, and most of them then just get lost in the system, unfortunately. But we believe that there is an opportunity in this market, and are monitoring this, and have also some development projects underway. And this is because we are in the business of providing mobility solutions for chronic mobility impairments. So that is our core patient focus, if you will. So this is definitely in the medium to long term an area where we are likely to find a way to participate in and help develop that market.
So a lot of talk, a lot of excitement, but as a company, you need to see when the system is ready for putting something in market.
We need to choose the right path. Yes.
Investment.
Yeah.
Perfect. Exactly. Thank you. I think we got through all the questions, Sven, and thank you for presenting your company, answering questions, and thank you for the audience listening in. May everybody have a nice weekend.
Thank you very much, Chris, for listening in.